All right, today we're going to break down a professional crypto trader's personal strategy for riding those big market trends. We're going to look at a system that's all about trading with the market's momentum instead of fighting against it.
You know that feeling, right? You see a huge trend take off, but by the time you feel confident enough to jump in, it feels like the party's already over. Well, the strategy we're about to walk through is designed to fix that exact problem.
So here's what we've got on tap. We'll start with why riding trends is so tough. Then we'll introduce the 920 EMA strategy and give you the complete blueprint. After that, we'll get into reading the signals, see it in action with a real trade, and finally, talk about how you can start practicing safely.
Okay, so let's tackle that core dilemma head on. The whole goal here is to get into a trend early, and this entire strategy relies on one specific type of indicator that's really good at spotting those shifts in momentum right as they're happening. Let's look at the main tool for the job.
So the tool at the heart of this whole thing is the exponential moving average, or EMA. The reason traders love it is because it reacts fast. See, it gives more importance to what the price is doing right now, which is absolutely crucial if you want to catch a new trend at the very beginning.
So what's the big deal with an EMA versus, say, a simple moving average, or SMA? Well, it's pretty simple. The SMA is slow and steady, giving all the old price data the same importance. But the EMA, it's all about speed. It focuses on recent action, making it way more responsive. For a trend-riding strategy, that speed is everything.
All right, let's get into the nuts and bolts. This is the actual blueprint for setting up the strategy on your own charts, and you'll see it's actually beautifully simple. It just relies on two main indicators.
Yep, that's it. It all comes down to just two lines on your chart. We've got the 9 EMA, which is our fast short-term guide, and then we have the 20 EMA, which shows us the bigger mid-term trend. The entire strategy, every single signal, is based on how these two lines interact with each other.
And here's the full blueprint, laid out nice and simple. The indicators are the 9 and 20 EMAs. You can use this on a bunch of different time frames, but the trader who developed this really prefers the 1-hour chart for his swing trades. And check out that last line. The ideal risk to reward is 1 to 3. That means you're always aiming to make at least 3 times what you're risking. That's how you build a profitable system.
Okay, this is where the magic happens. Having the lines on your chart is one thing, but knowing how to read them, that's the most critical part. So let's break down the exact rules for when you get in and when you get out.
You've probably heard this a million times, but with this strategy, it's not just a saying, it's a hard and fast rule. The secret isn't just knowing the trend, it's having the discipline to only trade with it. If you can just stick to this one rule, you'll probably dodge a ton of bad trades.
This is probably the most important rule of the whole system, and it's dead simple. If that fast 9 EMA is above the slower 20 EMA, the trend is up. Period. You should only be looking for opportunities to buy. And if the 9 EMA is below the 20 EMA, the trend is down, and you should only be thinking about selling. That's it. No exceptions.
Now, this is a huge warning from the trader himself. If you see those two EMA lines getting all tangled up, crossing back and forth like spaghetti, that means the market has no direction. It's just choppy. This strategy is for trends, so when you see that kind of messy chart, the best trade is no trade at all. Just stay out and wait for a clear direction.
Okay, let's walk through a perfect sell setup, step by step. First, you need the crossover. The 9 EMA has to cross below the 20. That's your initial signal. Then you want confirmation, like seeing the price crash through a key support level. But you don't chase it. This is key. You wait for the price to pull back up towards that 9 EMA. When it gets there and gets rejected, that's your entry. Then you just set your stop loss right above the last little peak.
All right, so theory is one thing, but does this actually work in the wild? You bet it does. Let's take a look at a real-world trade example from the source material to see all these rules come together perfectly. Check out this Ethereum trade. It followed the playbook to a T. The 9 crossed below the 20, a support zone broke, beautiful confirmation. Now, the most important part, the trader showed patience. He didn't chase that initial drop, he waited for that pullback to the 9 EMA, entered when the price was rejected, and boom, the trade moved into some serious profit.
And just to show you this wasn't some lucky one-off event, look at this. This was the profit from another trade using the exact same setup. When you combine clear rules with patience and real discipline, this is the kind of potential we're talking about.
And this quote right here, this is a huge deal.
Because the rules are so clear, you know exactly where to get in and where to get out. You can literally set your trade and walk away. For anyone who can't be glued to their screen all day, this set it and forget it style can be an absolute game changer. Okay, seeing big numbers like that can get you really excited, and it's easy to want to jump right in. But let's pump the brakes for a second and talk about how to approach this the smart, responsible way.
And this is the #1 piece of advice from the trader who uses this system. Do not get overexcited. The most important thing you can do right now is not to throw real money at this, but to practice. Practice, practice, practice.
So, here's your roadmap to getting started without risking a dime. First, find a trading platform that offers a demo or paper trading account. Use it to apply this 9-20 EMA strategy with fake money. Then, and this is crucial, track everything. Analyze your results. And only after you've proven to yourself that you can be consistently profitable in a demo account, only then should you even think about going live with real capital.
So there you have it. You've got the tools, you've got the rules, and you've got a safe plan to get started. The blueprint is all yours. The real question now isn't just if this strategy works, but if it works for you. So what's your first step going to be to test this out and see if this trend riding system is a good fit for your own trading?